A slightly different location today, but let's get into my Freetrade investment portfolio. So in my Freetrade account, I have my general investment account and also my ISA. And my Freetrade portfolio represents the most money I have in investments. So if you want to check out my other investment portfolios with a lot less money, you can check out those, and they're more representative of beginner investors. But anyway, let's get straight into the portfolio. So as you can see, the value of my general investment account is 19,997. So I'm filming this on Saturday the 12th of November, so it shouldn't jump around too much. Last week the American CPI numbers were out and they were a bit lower than expected, and the stock market took a huge rally. And we can see this clearly represented by a huge rise in my overall account balance, going all the way down from 19,200 to around 20,000 at the peak. This is welcome news for any investors, but we have to take in consideration that overall we are currently in a bear market and things can still dip, but the future is uncertain, and our investing habits should reflect the fact that there's so much uncertainty. So let's go through all my holdings from the least value to the most. So Intel, still I have 0.1 shares, and that is down by 43%. CSN is down by 28%. The iShares World Dividend is up by a big 6.2%. Gap is down by only 3.9% right now. Kyndryl will always be plus 0% because this was a stock derived from another stock. Xinhuan Real Estate down by still a big 84%. Rolls-Royce has gone up a lot. It's gone up by 31%. Still a long ways away from its heyday, but it is doing really well. Recently, Rolls-Royce has secured a big order, so that's also been reflected by its share price. Satorna Alcatraz Global Focused is down by 11.68%. Aston Martin still down by a huge 92%, but over the past 7 days it has gone up by a large 18%, but of course the stock price was already so low that every increase looks like a lot, but it's actually not. If we go back to its max performance, the stock price was at 43, which it will probably never go back to again. Avaya Holdings still down by a massive 92%, which is a loss of £828, which is a lot. ESG Global down by 5%. Clover Health down by 87%, and that is another big loss of £784. CrowdStrike is not doing too great, but it has recovered since Wednesday, and that is down by 24%. Cognite Software is down by 85%, which is a huge £763. AGM Holdings down by another 84%, so similar to Cognite Software, that is down by £750. Fastly, again, these very similar, all these tech companies down by 82%, that's £730 loss. The FTSE 250 has been doing extremely well recently, so this is the UK mid-size and mid-cap companies, and as you can see over the past month it's gone up by 16%. So the UK economy on paper, or at least in stocks, is doing quite well. Yesterday the pound against the dollar, £1 will give you $1.18, so it's the highest it's been in a while. It looks like there is a good forecast for the UK stocks. However, the Bank of England has gone out and said there'll be a 2-year recession, that they are expecting the economy to shrink and contract, so take that for what it is. Alibaba down by a massive 63%. Albert Mineral down by 60%. Beidou is actually taken a bit of a rise in the past few days, and that is down by only 43%. One Life down by 41%. Metrobank seen a small increase over the past few days, but that is overall in my portfolio down by 31%. Corsair is down by 35%. Shoals is down by 28%. And because this company relies on solar, Shoals could be a potential good candidate stock to keep for the long term. We will see. So the S&P 500 holding that I have from iShares is up by 3.9%, and the FTSE Japan is up by 1.84%. However, this is not truly the figure that is correct. Like I said in my previous video, don't rely on Freetrade's calculation of your stocks, because I've been buying and selling a few FTSE Japan ETFs. It has kind of messed up the average buying price, and this doesn't reflect how much I actually put in. So for example, for these 355 shares, I bought it for around £25.10. So by looking at the Freetrade stats, I might think I'm in the profit, but I'm clearly not. I'm actually in a loss of £300. So definitely don't just look at the stats for your Freetrade portfolio. I would highly recommend making a spreadsheet like I did and put all your stocks and how much you bought it for on what date you bought it, and then you can go back and cross-reference. So that's my stock holdings in my general investment account, and let's see how much cash I have. So currently I have quite a lot of cash in my general investment account, so I have £5,517, and the only reason why I have this much cash and I haven't invested it is because I had a sell limit on GSPX, which is the S&P 500. So as you can see, I limit sold these for £6.70, and I didn't anticipate these stocks going that high so soon, and so they hit the sell limit, and now it's being converted into cash. I'm of course going to be deploying this cash into stocks. Whenever I see an opportunity, I'm going to buy these ETFs. So my favorite ETFs being being S&P 500. It's the one that if I could recommend, I would recommend the S&P 500. It's just that one ETF that you can buy, and you don't really need to look into diversification because it's already diversified with over 500 companies, the top 500 companies in the US. And of course, the US as an economy is a powerhouse, and it also does business internationally, so it has exposure to multiple different markets. Maybe not a lot of exposure in the emerging markets, but hey ho, it is overall the whole world. So now we're going to be going into my ISA, which is my current tax ISA and probably going to be my next year's ISA too. So the value of my ISA is 43,785, and as you can see, it's been doing quite well. So it's up by £3,785, and as you can see from the graph, it's quite comedic. It looks like a massive deposit, but it's actually not. So it went all the way from 42,728 to a massive 43,780, pretty much a £1,000 rise in 2 days. I'm very happy with my ISA, and I'll quickly go through my holdings. There's not a lot, and I explain why. So Alba Mineral, I only have 2,403 shares, but the share price is very low, so I only bought around £5.91, so I'm down by 55%. Rolls-Royce, again, great buy at 69p, is up by 30%. Master Energy not doing too well, but hey ho, I only put £60 in. FTSE All World High Dividend Yield, that for me is up by 2.9%, but I only have one share. 2 shares in the Vanguard S&P 500, and that is up by 1%. Again, not a lot of shares. Disney, 3 shares, that's down by 23%. Meta has been doing a little bit better after its incredibly poor performance recently, where it went down to around 80 something at one point. Yeah, 88.91. So small recovery for Meta. It's a stock that I'm going to keep for a while because I'm not going to sell it at loss, and I'd rather lose all of it than to sell it because it's not a lot of money, and I'm just going to keep Meta. GSPX, my current favorite ETF, so it used to be the FTSE Japan, but now GSPX has proved to be my favorite ETF because of its huge volatility and the fact that its share price is so low that you can buy thousands, and whenever it moves by even 1p, you're making a lot of money if you buy and sell, which is something you shouldn't do, but it's something I've been doing, and currently it has paid off. So as you can see, overall I am up by £3,785 in today's market. That is pretty well, and the only reason why is because I've been buying and selling ETFs. Now I must explain to you there is a downside in doing that, right? You might be thinking the downside or the risk is actually losing money, but the risk in my case is not actually losing money, because if I buy an ETF, for example the GSPX, if I bought it for example at £6.82, the worst that can happen is that it drops even more, which means that I buy more of it and reduce my buy-in price. That you might think is the worst thing, but actually it's the opposite. So for example, we're going to give the example now is that it shot up to £6.78. So now for example, if I want to get into the game, I've sold all my holdings and it's shot up by £6.78. Now if I want to buy it, I'm going to have to buy it at a higher price, and who knows what's going to happen then. It might go up even higher. I might say I want to wait until it's £6.23, but it goes up to £7, £8, £9, and then I'm completely out the game. I've lost more money, potential money, than I've actually gained. So that is the downside of buying and selling. But my consensus is that we're in a bear market. I mean, look at this trend. It goes up, goes down, goes up, goes down, making a lower low. Each time it's making a lower low, right? I'm not a trader or anything like that, but I just think for now, while I'm young, when I can recover from this, I'm going to buy when the price is really, really good, right? So for example, I bought lots at £6.57. So £6.57 for me, that's a very good price. I can hold that until the cows come home. I can hold it for a long time, right? But when I see it rallying up again, in my head, I think this is just another bear market rally. So then I sell at a higher price. If it doesn't hit that sell price, it's fine. It doesn't matter. I'm just going to keep holding it. If it drops down another 30%, who cares? I'll just buy more. I'll be silly not to have put my money into this market when it's down by nearly 30-40%. So that's my thinking. As you can see, overall, up, down, up, down, up, down. Who knows what's going to happen next? Next week, we might see the GSPX go up to £9. Who knows? And it never go back down again. We never know that. So there are risks in doing this. Probably the best strategy would be to dollar cost average, just to keep buying regardless. You hear this all the time, and this is probably the best advice ever to be given, and this is what I plan to do after just maybe 1 or 2 months of trying the market, right? Of course, famous last words, I could be losing money, whatever, but it's my money, it's my risk, and I'm telling you not to try this. It's not going to work out for you, probably, most likely, right? I'm telling you, dollar cost averaging over the past 100 years has worked out better than this. I am going to be dollar cost averaging anyway. On my other portfolios, I don't do any of this buying and selling stuff because I know it's stupid. So for me, it's quite fun. So I'm doing it as a hobby. So just make that very, very clear. So I'm going to go into my account and show you how much cash I actually have right now. So it looks like I have 53 pence, but it's actually not the case. So the total cash I have is £42,511.53. And the reason why it says 0 here is because I've reserved the cash. A good thing about Freetrade, and probably of course other platforms such as Trading 212, is that you can put in buy limits or sell limits, stop losses and stuff like that. So I've actually put in buy limits, so if the price hits £6.21 again, I'm back in the game. I'm going to hold it forever. I think for now, when I buy it at £6.21, even if it hits that or not, I'm just going to keep it. I'm not going to be timing the market again. Let me tell you why my reasoning is behind that, because I've learned my lesson. I've only made £3,785 this year. Yes, its profit is really good, but if you see some of the quick upturns in the market, as you can see over the past month, it's gone up by 9%. 9% of my portfolio is a lot higher than £3,000. So that is just proof that dollar cost averaging or lump sum investing is better than trying to time the market. So I've learned my lesson. Let's hope we go into another bear market and I buy into this, and I'm not going to be buying and selling again. I might be doing some buying and selling in my general investment account, and that is because I try to make more profit, and eventually I'm going to be selling all my GIA holdings anyway because I want to transfer it to my ISA where it's more tax efficient. So that has basically been my strategy for investing on my Freetrade portfolio. The best strategy and the best performance will always be overall the people that dollar cost average, the people that lump sum invest, the people that invest regardless of where the market is heading. And my intentions are always to stay invested. The amount of cash I have in my ISA does hurt me a little bit, but I am somewhat confident that the prices are going to go back down and I can deploy all my cash. The thing is, when you're young is the best time to take risks like this, because when you're older you might not be able to recover from another bull or bear market. So take that for what it is, depending on your risk appetite. My risk appetite is probably a lot higher than yours, because at the end of the day, money is money. I don't really care about money. If I lost all of it, it is what it is. Honestly, it is what it is. I have lived without money and I can live without money. It's not a problem. Make sure to check out some of my other videos, and I'll see you in the next video.